Investors were not expecting to start August this way, and if history is any guide, it could become even trickier to navigate. Bob Pisani is at the New York Stock Exchange.
Talk about a tough setup for August. The market sold off today on a string of tweets from President Donald Trump signaling more tariffs on Chinese goods are coming next month. But even beyond today's move, history has not looked kindly on the month of August for stocks. It's the worst month for both the Dow and the S&P since 1987. And the S&P might be up 20% this year, or was, but earnings are flat. That's making stocks look very expensive right now. Trade tensions are obviously ratcheting up. There's very little clarity on the global growth story in general. And as Federal Reserve Chair Jay Powell made clear at his press conference yesterday, future rate cuts from the Fed are not a guarantee. If there's one thing that's made it easier for the bulls to stay bullish, it's lower interest rates. The markets are becoming more reliant on central banks to provide a backstop to slower global growth by cutting rates around the world. Still, plenty of bulls on Wall Street are arguing that the U.S. economic data still remains strong for the most part. Interest rates remain low, and despite Powell's reluctance to endorse a series of rate cuts yesterday, central banks around the world are certainly in easing mode. Still, the perceived benefits from the Fed cutting rates may have passed, and that could be a problem for stocks in August. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.